So yesterday was actually a relatively good day for the markets. We, of course, had Jerome Powell come out and speak for a bit after the Federal Reserve hiked interest rates by 75 basis points, and investors and markets liked what they had to see. Big tech in particular did really quite well. Amazon and Tesla up by 5% each. Google, Meta, Microsoft and Apple were up by 2 or 3% each. It was really quite a strong day. Financials did well too, because actually higher interest rates tends to mean more revenue from them regarding things like credit cards and loans and things like that. Healthcare was strong, industrials was strong, real estate was strong. The only sectors which didn't really perform too well were firstly consumer defensives, which have been getting absolutely hammered by inflation recently, and then energy stocks because actually oil prices fell a little bit for once. On the whole then, the S&P 500 rose by about 1.5%, the Nasdaq performed better, rising by 2.5%, and the Dow Jones performed worse, falling by 1%, and then finally the Russell 2000 rose by 1.3%. In the rest of the world then, what happened there? Well, it was much the same story. Every investor in the world was just listening to Jerome Powell and waiting to hear what he had to say, and they all liked it as well. So the rest of the Americas performed quite well, green across the board. Europe was strong as well, as was Asia. The FTSE 100 rose by 1.2% and the Stoxx 600 rose by 1.4%, meaning that on the whole, the MSCI World Index rose by 1.3% for the day. So after the absolutely awful start to the week, actually this was quite pleasant for a lot of people to see. Now, the dollar lost a bit of value, as you probably would expect. It's been seen as a bit of an inflation hedge recently, and so the Federal Reserve coming out and saying that they're going to seriously fight inflation this time, well, that makes the dollar just slightly weaker. The dollar spot index fell by about 0.9%. The euro rose by 0.4% against the dollar and now sits just almost at $1.05 per euro. The pound rose by 1.6% and rose up to $1.22 each, and the yen rose by 1.3% to now 134 yen per dollar. In the world of fixed income assets then, what happened there? Well, we saw yields fall and prices rise as investors re-entered the bond markets. It was really quite volatile actually. The US 10-year Treasury yield fell by 17 basis points across a single day, which is a huge amount. It now sits at 3.31%, which, let's not forget, comparatively is still very high. Go back to any point in the last 3 years, and that's the highest we've had since that time. The German 10-year yield fell by 11 basis points, and the British 10-year yield fell by 12 basis points as well. As for commodities then, what happened in the oil market? Well, WTI crude oil fell 2.6% down to $116 a barrel, and Brent crude fell as well down to $118, which is why energy companies didn't perform too well. Again, though, that is some slight downwards movement, and it is relatively nice to see, but those are still way too high prices. Oil at $115 a barrel is still going to cause massive inflation across the board in every country, and in particular in the US. So no, until we see some actual sustained movement down towards the $100 a barrel mark, I don't think that we're going to see any respite on energy inflation. Finally then, for traditional markets, gold prices rose by 1.2%, acting more as a risk-on correlated asset than something risk-off. It now sits at $1,835 an ounce. Now, in the world of crypto, what happened over there? Well, actually, most cryptocurrencies, most coins, they rose for the day, moving in line with other risk-on assets, as you should expect them to. Bitcoin up by 6%, sitting just above $21,000 right now. Ethereum up 11%, sitting just above $1,100 right now. Most other altcoins rose somewhere in the region of 5 to 10%. Some a fair bit higher and closer to 20%, but actually this is after one of the worst weeks in crypto that we've seen for years, so this isn't too good news. Bitcoin at $21,000 is ridiculously low compared to where it was just 2 weeks ago. Ethereum at $1,000 is insanely low compared to just where it was a month ago. So really, no, the crypto bear market is still here in my opinion. Now, regarding this crypto bear market, El Salvador, who made loads of headlines just over a year ago now, when they came out and adopted Bitcoin as an official currency. They were the first country in the world to do it, and they sort of heralded themselves as the first of decentralized finance to really move in that direction. So far, though, things haven't really gone according to plan. They have a paper loss of $14 million on their Bitcoin trades right now, which El Salvador's finance minister has come out and said well, it doesn't count, it isn't real because they haven't sold any coins, which, yes, is technically true, but it's the kind of thing that retail traders say on Wall Street Bets, and not the sort of thing you expect to see coming out of a country's actual finance minister. This is just a little bit odd to see, not the kind of thing you expect, and a little bit ironic. Now, the biggest news for the day was obviously the FOMC meeting, where the Fed came out and firstly hiked interest rates by 75 basis points, or 0.75 percentage points. And they say that next month for July, it's either going to be 50 or 75 basis points. But then Powell did come out and say that actually these big hikes are going to be rare into the future. The markets liked what they heard. That's why stocks rose for the most part. They like that the Federal Reserve is fighting inflation fiercely now, trying to drag that figure down, and that they're serious about this. But in the long term, I don't think they really will like this. Higher rates means a much harsher monetary environment, a much more difficult environment to build a business in, especially. Growth is really hard to achieve when debt is expensive. We also have a myriad of other problems, like consumer sentiment being lower than it has ever been in history, lower than it was during the worst moments of the COVID pandemic, the worst moments of the 2008 financial crisis, the worst moments of the dot-com collapse. It's never been this low in history in the United States. We also have mortgage rates that are already sitting at about 6.5% and are probably going to go above 7% soon with this new interest rate hike, which means that the average monthly mortgage payment is going to double for people who are now buying homes. That's going to have huge downwards pressure on housing prices, and there's a decent chance we see that housing market bubble start to pop as well. Now, why is the market not worried about this? Well, it's because Powell has done his job as the perfect market whisperer once more, saying that they're fighting inflation fiercely now, but in the future, things are going to tame. Inflation is going to disappear, so they'll only need 25 basis point rate hikes, and then they'll stop within a year. Basically, the markets are being told what they want to hear, and they like hearing it. Now, we actually did have news come out from the European Central Bank, which is the worst and the most irresponsible central bank in the entire world right now, because they're seeing a new debt crisis form, because debt is getting too expensive. In reality, this is a result of their own policy over recent years, the exact same policy that, the Federal Reserve and the Bank of England and every other central bank pursued as well. But that doesn't mean they're blameless here at all. Borrowing costs are starting to rise, especially in certain countries. In general, the southern parts of Europe, Italy is one country where it's getting a little bit bad. But because this is the EU and the European Central Bank and the Euro, these countries don't have their individual monetary policy. The ECB has to try and fit one monetary policy to over 20 different countries, and that just isn't possible to be effective. That's why Greece is still in such an awful place 10 years after its debt crisis, and it seems like Italy might be going that same way. Now, last time this sort of thing happened, Germany stopped Italy from helping itself, and it seems like they may be wanting to do the same thing here today. The ECB is trying to fix this problem by basically just creating a new bond buying plan, which is awfully similar to quantitative easing, which would send inflation even worse across the entire continent. In short, this is a hugely nuanced, a very complicated topic. I will be putting a full video out on this later, and actually we'll be covering Powell's speech and his Q&As after the speech as well. So do look out for that, because there's just too much to talk about in this specific video here. Now, Bill Gates has dragged himself out of bed, out of the woodwork, and has come to tell us all that he thinks that cryptocurrencies and NFTs are a sham, and that they're all based on the greater fool theory. Now, actually, there is some credence to what he's saying here. He, in particular, makes a digital monkey joke, which is very relevant and, again, absolutely fair. And when he talks about NFTs like that, to be honest, I agree with him. 99.9% of the NFT projects out there are grifts designed purely to profit the creators of them. They are not real investments, and they will not perform long term. They're already starting to see that bubble collapse as well. But cryptocurrency is slightly different. There are real use cases for some of these cryptocurrencies. Some of them are trying to solve real world problems, and if they can do that effectively and scale effectively, then they will get past this whole greater fool theory problem. We're not really there yet, so I agree with him in that sense. But really, what we see here is Bill Gates staying quiet while crypto explodes and while everyone gets rich. And then the second things turn and everything starts to fall apart a little bit, Well, he jumps on the back of a bandwagon and comes out to tell everyone that actually he was right all along and it's always been a bunch of scams. Now we have some news out of Robinhood, which is either going to make you very happy or you're probably not going to care at all. I say that because a lot of people root for the downfall of Robinhood because of their dirty dealings when it comes to payment for order flow and with halting trading, particularly with GameStop and AMC over the last couple of years. Well, basically, Robinhood is now valued less than its free enterprise value. Now, that basically means if you take away all the cash on hand and all the debt on hand, so take away what the company has in its bank balance and the debt that it owes, how much is the physical company worth? Well, apparently, it's now worth a negative value. It's literally worth nothing because the company has $6.2 billion worth of cash on its books and it's only valued at about $6 billion. Now that is a little bit funny to some people. It means that the company's sort of valued at negative $200 billion. In reality though, it's a little bit different than that because actually if you buy shares of Robinhood, you don't get access to that cash. Yes, if they paid out just all the cash they had on hand as a dividend, then yeah, the shareholders right now would have more money than they had before, but Robinhood isn't going to do that. They've built up this war chest of cash to survive a recession. They were actually relatively smart with it. They raised a lot of private capital over recent years, and then they IPO'd at the IPO boom as well and raised loads of capital then. So this is a little bit of funny news, but no, it doesn't mean Robinhood's about to die, I'm afraid to tell you. There are actually a lot of companies with similarities like this. Coinbase is another one. Tons of Nasdaq listed tech companies actually made money while the sun was shining, and now they're going to be able to weather the storm that comes over the next few years. We then got a little bit of news coming out of the UK where one of our ministers has said that he wants to help the UK become a global cryptocurrency head. And now this is actually very reasonable. It's something that's actually very doable, but unfortunately we've heard these sort of headlines before and nothing's ever come of it. And frankly, I don't think anything ever will. Now, the reality is that actually the UK could do this if they wanted to. We've left the EU, we can build our own regulations, we can work to reduce taxes and draw companies into our country from abroad. In particular, the City of London is sort of self-governing and is even more flexible when it comes to attracting business. And if they wanted to, they could put into place rules and regulations which would attract every single cryptocurrency exchange, every single major crypto company in the world into that city. It would bring thousands of jobs and drive billions of dollars into the country. But this is never going to happen because, frankly, our British government lacks vision and it lacks a sense of urgency. They say these things, they make people write articles about them, but nothing ever comes from it, and you really shouldn't expect anything to come from this either. Finally, then, we have a little bit of news regarding Russia and Ukraine and that whole situation. The first is that Biden wants to send another $1 billion worth of military aid over to Ukraine. Now, this is a very controversial topic in the US. Because there's a lot of trouble at home. People are poorer than ever. Inflation is sky high. A lot of people can't even afford to fill up their vehicles with trucks, and they see money being sent halfway across the world to Ukraine to fight Russia in a war that a lot of people don't even support. Now, personally, I do think this sort of thing is worth it. When the British government donates this money to Ukraine, I do support it because, frankly, I see value in ensuring that Russia is defeated in Ukraine so that we don't have to fight them later. It sounds a little bit awful, but I do see the value there. I do also, though, recognize a lot of Americans' point of view when you say that actually it's a lot further away from you. It isn't as worrying to you. And frankly, you'd rather keep the money in your economy and use it to help struggling Americans. I don't think there is a right or wrong answer here, but it is certainly clear that this isn't a totally positive story. It isn't necessarily something that is that everyone agrees on. I don't know if it's going to help Biden's approval ratings, but they are really low at the moment. We also got some news a couple of weeks ago that Russia has been stealing wheat from Ukraine and traveling it, sending it down the Caucasus and selling it on the black market to various countries. They're now apparently doing the same thing with steel from Mariupol, from that city. Of course, Azovstal is a steel plant, an absolutely massive one of the biggest in Europe. And Russia finally has control of it. And so they're starting to steal that wealth from Ukraine as well. Really, this amounts to plundering and neo-colonialism. It isn't a good thing, but it's not exactly surprising either. And then the final thing that we're going to talk about today is that Russia have actually done what people have been begging Germany and Italy do for months now, and Russia is reducing the amount of natural gas that they export to Germany and Italy. Now, this isn't doing them a favor. Germany and Italy want this natural gas. It's used to heat homes, and I know there's sort of a heat wave here in the UK right now. It's probably hot in the rest of Europe as well. But over the course of a year, it's still terribly important. Natural gas is also used a huge amount in generating electricity. And in a country like Germany, where electricity use is massive because it's got quite a large manufacturing base, well, natural gas is incredibly important. So why is Russia doing this? Well, they're doing it simply to apply pressure to these countries. They know that this will cause their energy prices to spike. They know it will cause inflation in Germany and Italy to spike. They know it will cause tension between certain countries within Europe. This is the Kremlin playing their games and doing so quite efficiently. It's bad news for inflation in Europe. It's bad news for Europeans in particular. And it's also very bad news for the European Central Bank, which has no ability to control any kind of narrative. And it is completely incapable of making hard decisions when they need to come. This is going to make inflation worse. And as they are also going in the opposite direction and making inflation worse themselves, I really don't see it getting better for Europeans anytime soon. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.